Both advanced economies and emerging markets show a decline as of import demand. Today's data released from the Netherlands Bureau of Economic Policy Analysis (CPB) shows emerging markets are leading the pack with a significant decline of 3.1%. Among the advanced economies, the U.S. is no longer the locomotive for trade that it was in 3Q of last year. For the second month in a row, the U.S. shows no growth of import demand. It looks as if the negative effects of higher tariffs on American demand for foreign goods are finally starting to bite. The already released data on the value for American imports in December shows stagnation, what does not bode well for next month's data release on the volume of imports. Chinese data point in the same direction. The value of Chinese exports to the U.S. was 3.8% lower in December than a year earlier. We expect the damage of the trade war to increase over the next 12 months. By far the largest part of tariff elevations by the U.S. and the subsequent retaliation by the U.S. trade partners has only been implemented in the second half of 2018. This means that its detrimental effect on trade growth will continue well into 2019. On top of that, we foresee more tariff elevations to come. We don't expect an all-encompassing deal between the U.S. and China before the deadline of the 1st of March. The U.S. demands are simply too numerous and too complicated to be resolved on such short notice. On top of that, we think that China is not willing to give in enough to the rather demanding wish list of the U.S. The list does not only encompass lowering the bilateral trade deficit substantially but various changes in China's industrial policies as well. In an attempt to strong-arm China into giving in more, we forecast President Trump to step up his trade war and impose further tariff increases on Chinese imports further during the course of the year. For the short run, we don't expect a deal between the EU and the US either. Even before formal negotiations have started, things have become more complicated with indications that the U.S. wants to add opening up of the EU agricultural markets to the agenda, traditionally a no-go for EU member states like France. Altogether this will lift the share of world trade affected by the trade war from 6% last year to 13% at the end of this year. This will take off 1.1 percentage points of trade growth for this year and make 2019 a candidate to beat the 1.4% growth figure of 2016 as the weakest year for global trade growth since the trade collapse in 2009.